can talk about indicators all we want, but it's really when we see the money that we get excited. So it's time to put all of those indicators to good use, and a trade strategy at this point is what is needed, Doc.
Yeah, what I'll do is illustrate how to take a trade using all of them. I'll run you through an intraday movement of Nifty. Okay, I've set it up on the chart from some time in the back. This is a situation where we have a break in the moving average line, and we have the MACD which is actually broken lower than let's say 0 level. Here the ROC is lower than 0, and the RSI is also trading down lower than the mid let's say neutral zone. So everything is go, and this is actually a short, so we should be taking a short here. Let's see how that trade actually trades up, and here is the trade as it would actually go live. Now here is a situation where we are moving down significantly. We took the trade at about 58.50, and okay,
selling
now
short.
Yeah, we have actually taken a short. Now let's pause to see where we are. We are significantly lower than where we were, so the short that we took has been the right trade, and it has cleared out on the downside. Now we take a look at the RSI. It's gone into the oversold, so we should be alert here. If you take a look at the ROC, it's also into the oversold, and it is somewhere near the lower the levels that we had seen earlier. Now the MACD line is still trading lower than its trigger line. Now the MACD line cutting the trigger line is a very, very sensitive indicator, which is what we should wait for before we close out the short. So let's play this out a little more and see when the MACD actually cuts the trigger line. So there is some amount of movement which is on here, and the stock falls even more, and here is where the MACD line is about to have a trigger. See, unless you have something planned out like this, it will be very, very difficult to stick with such a long trade which is on your short side. Now as it sort of plunges down, and here is where if we stop and see, we find that the MACD line here has actually cut its trigger line. If we go and look at the ROC has actually gone to deep oversold, and it has actually started going higher. So it is saying that the downside momentum may be over. The RSI has also formed a small divergence pattern. This is like a class 2 divergence, what we speak of in technical. So all the situations are there at this particular stage for you to think about trying to take profits.
And
but
that's the difference you can see. These are all leading indicators,
yes,
whereas your moving averages are yet very far apart. So
yes,
that's not telling you yet to square up your trade.
Absolutely. So you could either at a stage like this, you have a choice: use the same moving averages, or you can actually drop the period and track this closer, or maybe you could drop in a trend line, any which of them. But what is clear here, we had a short somewhere around 58.50 level, and we are trading down to about 55.50 levels. All the indicators were in place, and we had a smooth trade which gave us about 250 to around 300 points. You have a choice to begin your squaring up of trades out here somewhere. Now we find that unless we have a trend change, which is what you should be seeing on your screens very soon, now you have a situation where the prices have actually moved up and gone above the moving average. So this is where you should actually be looking to close out your trade. You still closed it out at about 55.60, and your entire profit was intact. This way, when you do it, you will not get that, the lowest low or the highest high. But then lowest low and highest high are actually got by accident and not by design.
Right.
By design, we try to capture most of the move which is there.
Excellent. That's a very good intraday trade played out for you. And very quickly now, because we are really running out of time, the viewer replies that we got for our chart quiz. Which one did you pick, Tom?
Okay, the one I picked is the analysis sent in by our viewer from Pune. His name is Prashant Shah. I must congratulate you, Prashant, on a job very, very well done. He has laid out his analysis in a neat and a very methodical way. Going at it tool by tool. He has used trend lines, he has used MACD, he has used RSI, etc., and constructed his set of arguments for the view that he has arrived at in a very, very methodical way. The only thing, maybe it's not a shortcoming, but it's a small thing that you might have overlooked, is that in your analysis you had not really mentioned a target much below what it was quoting last week. I think if you had looked at all the sets of targets, a price level of around 52.50 was clearly sort of staring at you on the chart, And there is one other point which I think has been common across all of them, all the responses that we got, is that most people have alluded to this head and shoulder pattern on Nifty. Now, while there is no doubt that it does look like a head and shoulder pattern, you all have to also appreciate the fact that a head and shoulder pattern very typically has to come at the top or at the end of advances. Now, this particular head and shoulder pattern, as it seems, is actually coming off the February low, whereas the market has actually made a high sometime back in November. So this is actually happening at a lower top, and therefore it may not really meet all the criteria if you go by the classical Edwards and Magee type of definition for a head and shoulder pattern. Aside from that, so one of the things to actually remember is that even though a formation looks like a pattern, it need not necessarily be that pattern. So I would say, for the clarity in thinking, for the clarity in the way it was presented, I would rate Prashant's the Singh reply as being the best.
All right, then, congratulations to the winner. And for next week, the chart quiz is on the Nifty and on Punj Lloyd. So take a 2 to 3 week view and write into us. With that, we've come to the end of this Oscillator special. When we come back next week, a whole host of strategies for trading in our market. Till then, goodbye.